Hey guys, good morning. It's Tony. I wanted to talk a little bit about the S&P 500 and why we might see a continuous rally to the downside or continuous push, right? As of right now, we still haven't really broken trend. I still think we're on trend. We still have strong support at 439, 440-ish. So unless that gets broken, I really doubt that anything bad's gonna happen. But the bad thing here, there's a big but, we actually closed on the daily. We actually closed the bear trigger on the daily on Friday, and we are currently oversold on the stochastic. And you guys already know how much both crypto and stocks like to keep going down when you're already oversold on the stochastic, and you are essentially creating bear triggers on the reverse MACD. The weekly still bearish. We were bearish back here, bearish, we dropped. Bullish, we actually ran up pretty nicely. Bullish here, we ran up, but we didn't actually run up as much as before. And on this weekly drop, we're actually seeing a pretty significant weekly drop after we closed bearish, right? And then on the month, obviously we can't really assume anything on the month because we haven't really closed we haven't closed the month of September bearish yet, right? And that's not going to happen. We don't really care about this until the 30th. But keep in mind, if the SPY actually closes, bearish for the month of time that the SPY has closed bearish, February 3rd, kept running down. Back here, October 2018, he dropped significantly. March 2018, big boy drop. Again, there's a lot of cases where once we close. Once we actually close a bear month, you see a lot of cases of big drops on the S&P 500. But again, don't really care too much about the monthly. All I'm really looking for is that the weekly stays bearish and that the daily, stays bearish. But the most important thing is really, are we gonna break trend, up here? And trend and support at like 439, 440, because if, let's say JPOW, right, let's say they don't want the S&P to crash, right? I can definitely see the S&P 500 doing something like going down to here to support, maybe throwing a wick down there and then bouncing up to like new highs, right? But what I can also see is if we break trend, we possibly go to these lows of 436, create a full candle under here, go back up, retest support as resistance, and then we drop all the way down, to like what's support, like 425, whatever. So there's two scenarios that are going to play out, and so far every scenario beforehand, for weeks now, for months, all we've really been doing is just going down on trend, bouncing down on trend, bouncing down on trend, bouncing, and it really bounces off the 50 MA, which we're at right now. So there really is only two things that can happen. Either you think we're going up and we go back to 454 and we stay on a bullish ride, or you break trend and you also break support at like 439, 440-ish. You go down about halfway or so, retest 430, 440 as resistance, not break it, and then shoot all the way back down to 430, in which case we can start looking at actual forecasts of possibly a big correction happening. Because keep in mind, if we see a 15% correction from the highs that we are at now, a 15% correction would throw us back to 386. A 20% correction would be back at 360. If we actually experience something like a 30+% correction, you're seeing massive drops, possibly all the way down to previous all-time highs of like 330-ish, 320, but where we were before the pandemic. And also keep in mind, there's a really nice gap at $400 or so. So I can definitely see us going back to minimum at least $400 to fill that gap, possibly down to 388 or so, and then bouncing from there, because we do have major support at the 388 level on the weekly. But also keep in mind that whenever we actually do close a bearish month, the average drop is usually 15 to, you know, anywhere between 15 to 20%. You know, unless there's some crazy catalyst where, you know, we actually see a full-on market crash instead of a correction. And in that case, I can easily see us going back to like, you know, like 330 or so, which would be pretty insane. With the whole Evergrande issue right now in China, I don't know how that would really affect us. It would really kind of depend on how, you know, our market or China's market was affected back when, you know, the US had its 2008, you know, the Great Recession, right? The market crash. So it really just depends on how China reacted from us having that issue. So we have to kind of wait and see how things play out. You know, I'm not a fundamental trader. I'm only a TA trader. And, you know, as far as fundamentals go, I'm not the person you should probably go to see what, you know, what can happen and how bad it can actually get, right? But for me right now, I can't really make a decision. I don't know what's going to happen yet. I think my major trigger point would be actually closing the month of September bearish. You know, and in which case, if we do, then, you know, I am 100% buying puts for like 2-3 months out for the S&P 500. But keep in mind right now that every single chart on the S&P 500 is bearish. So going into tomorrow, you know, I'm fully expecting this next week to stay bearish, and possibly if we're actually going to break trend or break support, I fully expect that to happen sometime this week. We definitely have the momentum to the downside to break support and break trend. So if we see something actually broken, I think it's going to be this week. If nothing happens this week and we actually recover and start moving to the upside, then, you know, you're pretty much solid on possibly seeing a recovery. But again, you know, my major trigger is actually having this little green bubble on the S&P 500, you know, on September 30th. If by market close September 30th, this stays like this on the monthly, I'm 100% buying puts for, you know, 400 bucks, 386 and 362, worst case scenario, more than likely like $400. More than likely for like 400 bucks on the S&P 500. But again, keep in mind, if we keep this little bear trigger on the monthly for the S&P 500, I gotta, you know, we have to hedge if you choose to, right? Personally, I'm gonna be hedging heavy. I'm probably gonna be hedging a little bit on the leverage side just to be even more in the clear. But again, the SPY does not look pretty as far as chart goes, right? Again, you know, Jerome Powell can come in and he's like, you know, fuck everybody. I'm basically gonna, you know, put a shit ton of money to the S&P. Boom, you blast off to like 500 bucks. But again, TA wise, SPY into the upcoming week does not look good. I'll see you guys later. Bye bye.